Have you noticed how Australia's property markets seem to have roared back to life recently? After a sluggish 2024, Domain's latest house price report shows that all 8 capital cities around Australia recorded house price growth in the June quarter. Now, that's the first time in 4 years. And it's not just houses, unit prices are surging too, often outpacing house prices as buyers are chasing affordability. So what's behind this rebound? Is it rate cuts, increased demand, a lingering supply shortage? Well, they've all played a role, but is this recovery sustainable now that the prices are the level they are? Will further rate cuts continue to fuel prices, or are there headwinds ahead? To help unpack this, I'm joined by Dr Nicola Powell, Chief of Research and Economics at Domain. She'll share insights from Domain's June quarter house price report and explain what the trends mean for buyers, sellers and investors. So whether you're a homeowner, an investor, or simply just keeping an eye on the market, you're going to want to hear what Dr Powell has to say. So let's get on with the show.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
Nicola, thanks for joining me again. I'm sure your phone's been running hot since Domain's latest house price report came out.
It absolutely has. The interest is always there. I mean, it's Australia's favourite thing to track, and that is our property market. And I think particularly for this one, because one of the key headlines really was momentum is firmly back. And when you look across house prices, every single capital city posted price growth over the June quarter. First time we've seen that, Michael, in 4 years.
That's amazing. Well, 4 years ago, that's when we had wartime interest rates. Virtually the banks were giving money away. And that was to try and get us through COVID. And that was a different and a very unusual market. But it really feels like the property market's turned the corner now, doesn't it?
It absolutely has turned a corner. And I think when you've got unanimous price growth across all capital cities, both for houses and for units, that uplift is happening across all capital cities. But what I would say is the trends are slightly changing. And what we had previously seen were those affordability markets were really showing the growth. So that was like markets like Perth, Adelaide and Brisbane. While they're still rising, what we have actually seen this quarter is a much sharper turnaround in momentum in our big capital cities. So really that's Sydney and Melbourne.
Well, you're reporting, and we're going to go into detail in a moment about the June quarter price reports, but every Saturday Domain, or over the week also, brings out the auction clearance rates. And that's a very good forward indicator of what's going on. And boy, have there been some almost scared to say boom time auction clearance results, suggesting this is not just a little blip.
It's been quite consistent. I think the turnaround in auction conditions has been very evident across Sydney and Melbourne. When you look at Sydney overall, it's the clearance rates have been hitting an 11-month high. And in Melbourne, I think that for me, that's that market. I mean, you and I have spoken about Melbourne so frequently, but when we look at clearance rates in Melbourne, they're now at a 2-year high. And it's been consistent. This isn't just a little blip of 1 or 2 weeks. This has been consistent throughout 2025, where we have seen clearance rates continue to improve. And I think for me as well, we know winter is the quieter time in real estate, but what we have got is certainly some robust clearances coming out of our 2 major capital cities.
You and your team see all the numbers before the rest of us. Do you ever find yourself saying, wow, this is going to surprise people? Or did you think this rebound was inevitable?
I did think the rebound was inevitable, but I think once you've got that, you can talk about what you think is going to happen, but what is nice is when you actually see that come to fruition. And we were already starting to see the turnaround occur in some of our other metrics around behaviour. So this was coming out in higher buyer inquiries, particularly in Sydney and particularly so in Melbourne. And we were seeing a bit of a shift in the city rankings, where we were seeing interest rise more rapidly in markets, particularly like Melbourne, where actually we were seeing markets like Perth coming off their peak in terms of buyer inquiry. And I actually think that's one of the early indicators of price movements. And you and I know it comes out in behaviours. People start attending open homes, then you start seeing high levels of buyer inquiry, then you start to see those clearance rates lift, and then it affects price. And so we've witnessed that it happen over 2025. And I think now to have it confirmed in that price movement where we have got that price momentum return, and we're seeing that house price momentum taper in some of those mid-tier growth capitals, and actually the stack ranking across our different capital cities is now changing. And I think the one stat that really probably surprised me is the median house price in Sydney now is just above $1.7 million.
Amazing, isn't it? That's right. And people wonder, can it keep going up? We can have a talk about a couple of reasons why I think it will a bit later on. But let's just go a bit further into your report. I'd like to just quickly zoom through the states and how they're performing, because there is quite some difference. But beforehand, do you think the Reserve Bank's couple of rate cuts was behind this?
I think it was a clear change. I think what it provided is a confidence lift amongst buyers. Obviously, it's improved borrowing capacity by roughly about 5% when you compare those borrowing capacities now to the beginning of the year. But I think for me, it's not just about borrowing capacity. It was also about the certainty that rates are now going to be reduced. Yes. The peak of inflation and the rapid increases in inflation are behind. And I think that certainty and that sentiment is a really core driver of our housing market. And that's definitely, I think, what's brought those side sitters, people that have been sitting on the sidelines, back to market. And I think, we did see that surprise from the RBA where they held the cash rate in their last meeting. But for me, I think it provides a certainty that they will reduce the cash rate come August. And you and I both know what that's going to mean for the spring selling season. I think it's going to provide quite a firm platform for a positive spring selling.
Quite a springboard to take off from, isn't it? So all the markets moved up, and Perth, Adelaide, Brisbane reached new record highs. But your suggestion in Sydney, and I'm going to give a link to the Domain Research report, which shows for each state houses and units, and they do perform differently. But let's zoom through them. Sydney had a house price increase for the quarter of 2.6% and units 1.5%.
That's correct.
It was just over a quarter. So if we annualize it, if it keeps going, that's going to be a pretty good result for the year.
Yeah, I mean, ultimately it could edge up into double digits over that 12-month period in terms of percentage increase. But when you look at that quarterly growth, 2.6%, which is $44,000 roughly added to the median house price. But for me, it's about the context. So that is actually the fastest quarterly rise that we've seen for Sydney in 2 years. So what that is, we've got consistent growth and we've got momentum building. And it's a similar aspect for unit prices, not quite as strong, as you said, 1.5%, which is about almost $13,000, but it's the strongest quarterly gain in 15 months. So it shows that we are seeing momentum coming back into Sydney's housing market. And I think what we're likely to see is that's going to continue over spring as well.
Well, people are going to ask why and how can it keep happening, but a lot of Sydney-siders have got significant equity in their homes, and so therefore there's going to be the right sizes and the downsizers still moving into the market. We know a lot of the baby boomers don't even have a mortgage against their home. Others are helping their kids with the bank of mum and dad. And just looking at the Australian Bureau of Statistics housing finance statistics for first home buyers, last year there were 110,000 first home buyers. So that made up about 20% of all the transactions. First home buyers are out there too, but maybe they're choosing apartments. There's still well-priced apartments in Sydney, aren't there?
I think that is one of the drivers for the increase in unit prices. I think first home buyers are looking towards units in Sydney. It's much more affordable. I think house prices are quite out of reach for a first home buyer. But then there's the other buyer segment, and that is investors. Investors are creeping back in. They're looking for those capital growth markets. They chase capital growth, and that is going to be Sydney and Melbourne, in my view. And I think particularly so in Sydney, we do have investors coming back in. But ultimately as well, I mean, it's a reminder that the housing crisis isn't over, right? We've still got an undersupply of housing.
Yes,
and that itself is still pressurising price too. I mean, we've still got robust rates of population growth at a time where we don't have enough housing. And we're not going to solve that housing crisis overnight. So I think the pressure, irrespective of a rate reduction, I think the pressure for house prices, unit prices is still there.
Well, I'm going to offend somebody by what I'm about to say, but you mentioned that first home buyers are having difficulty buying a house in Sydney. But I also think it's unrealistic for first home buyers to expect to be able to buy a medium price house. The media often talks about how long it takes to save a deposit for a medium price house. But why should first home buyers expect to be able to buy the type of house that took their parents 30, 40 years to be able to afford? So you've got to look at be realistic. And also, a lot of first home buyers are actually opting to rent and become rent investors, aren't they?
I think they are. They're looking towards those more affordable locations, or they're actually just leaving Sydney and moving to regional markets, or they're being
Yeah.
that rent vet. But I do think it's that timely reminder that, your first home isn't your forever home, and it's about building steps on the property ladder to move into your dream home. I think it is challenging for first home buyers. And this is one of the interesting aspects that we saw in this house price report. When you get down to the suburb level in Sydney, what we were seeing is it was really either affordability driven markets. So it was this shift west where you can still find more affordable housing prices. We were seeing them see the strongest rates of growth, or it was those locations that were benefiting from changes of infrastructure. So the greater connectivity with the two drivers. So it's either affordability or greater infrastructure connection.
Well, I'm going to leave a link again, as I said, in the show notes to the Domain report. And when you click on that, you can actually go down and have a look at house price growth per suburb for houses and units for all the states. If we move to Melbourne, which really has been a laggard for a number of years, and you and I in our previous chats were suggesting Melbourne's time is going to come. Clearly, the latest report shows quarterly houses went up 2.3% and units even a little bit more at 2.7%. They're still well below replacement cost in Melbourne, though, aren't they?
They are. The value is there for Melbourne. And I think it's almost got this dual aspect in Melbourne now. I think buyers are being sprung into action because of the reduction in the cash rate, but they're also being empowered by the value that is built up in Melbourne's housing market. And I think that dual aspect is really helping to turn Melbourne's housing market around. And when you look at the 2.3% increase for house prices over the June quarter, that's the sharpest growth that we've seen in 3.5 years for Melbourne. And it's the sharpest increase we've seen in units for 2 years. And when you think about, you and I have spoken about previously how Melbourne really, really struggled pushing into a recovery. Now we have an established recovery across Melbourne. When you look at house prices, they're halfway recovered. So that value is not going to be around for the longer term. I think Melbourne is going to move into catch-up mode. I think it's going to take some time, but I think, it's only $29,000 from its record, which was back in 2021. So that's only 2.7%. So, a couple of quarters of growth and we could see Melbourne at a new record high.
Well, we also know that in beginning of next year, there's going to be some substantial government incentives for first home buyers being able to buy properties with a 5% deposit, as long as they've got the serviceability for the banks. So that's definitely going to push prices up when more buyers come in. So there's a good window of opportunity, not just in Melbourne, but around Australia. Brisbane's done very well over the last couple of years, and units in Brisbane have done well. I remember a couple of years ago when there was a significant oversupply after the last building boom in Brisbane, with lots of vacant units, but units went up 3.6%, substantially more than houses in the last quarter, according to Domain.
Yeah, and we continue to see this, that unit prices are outperforming house prices in Brisbane. I think, house prices have seen significant gains. They've bridged $1 million. It's the 10th consecutive quarter of rise for house prices, which is the longest run of continuous growth in 21 years for Brisbane. But even when you look at unit prices, I remember that kind of glut of apartments that we had in Brisbane. And I always remember thinking, when are we going to see this market balance out? And it's it's truly done that. And, Brisbane now has the title of the second most expensive capital city to purchase a unit,
Wow.
which is remarkable. It's only behind Sydney, which just shows the interest. Brisbane does have that X factor, and that is the games. It's got lots of infrastructure investment. It's got lots of draws for pulling people from interstate for work opportunities. We've not only seen that come out in escalating rents, but also record pricing. But I do think that we're starting to see a little bit of momentum come out of Brisbane's housing market. I think it's kind of starting to slow down in terms of the pace of price growth, because what we were seeing previously is just unsustainable for the longer term.
Of course. Having said that, units living in Queensland obviously has changed. In the past, Sydney was where people first started to adopt unit living, apartment living, then Melbourne, and Brisbane people still prefer a front and backyard, but they're now prepared to trade space for place to be in the right spot in the lifestyle areas. Brisbane's grown up, and it's going to be on the map of the world map when it hosts the Olympics in a couple of years' time.
Absolutely will. And I think, you've seen interest from investors. I think more downsizers living in the apartments and also more first home buyers too.
Sure. Well, Adelaide performed very strongly for a couple of years, and then at the end of last year, it seemed to run out of steam. Again, units outperformed houses, according to Domain's June 2025 report. Units going up 2.6% in the last quarter, and houses only 1.1%.
You can feel that the steam is being released from the pressure cooker that has been Adelaide's housing market. And I love this comparison. When you look at Sydney, it's the fastest quarterly growth that we've seen for Sydney in 2 years. For Adelaide, it's now the weakest quarterly growth that we've seen for Adelaide in 2 years. So we're certainly seeing a slowdown in the pace of price growth. It has been such a leader in price growth, both for houses and for units. But I think affordability is catching up with this market. And I think investor interest is now starting to look elsewhere too. And we are starting to see the pace of, they're still growing, but the pace of growth is now starting to ease.
Well, another market that started to pick up is Canberra, which has been quite slow for a couple of years, hasn't it? It's still below its previous peak.
It is, but it is, if I was going to pick out markets that have seen a turnaround, it is Sydney, it is Melbourne, and it is also Canberra and Hobart in essence as well. I think with Canberra, my headline really is it's on a pathway to recovery now. And when you look at the increase in price over the quarter, it's a bit more modest compared to other cities, 1.1%, but this is a huge turnaround for Canberra's housing market. It's actually the strongest gain that we've seen in 15 months. It's still well below price peak, so about 9% below its mid-22 price peak. So that's about $100,000 lower than its price peak. But I think we're now starting to see growth. And actually, we saw quite a strong rebound in unit prices over the June quarter.
Well, as we move around Australia, Perth was clearly one of the strong property markets for this stage of the cycle. And while it seemed to have slowed down a bit, it's picked up in the last quarter again.
Look, it has a 2.4% increase in house prices, about $22,000 added to the median price. That's now 11 quarters we've seen house prices in Perth increase. That's the longest stretch since around kind of 2007. But overall, I still think we're seeing momentum coming out of Perth's housing market. I still think we'll see growth occur over the rest of this calendar year, but I think it's going to be much more modest compared to what we were recording. And when you look at the Perth medium house price, only $45,000 now separates it from being $1 million housing market. And I don't think I could ever imagine myself saying that, but here we are. It's quite realistic that we could see Perth bridge that $1 million mark by the end of this calendar year.
Well, I remember during the mining boom when Perth prices were very close to Sydney prices. And then there was over a decade or around a decade of minimal price growth. I think one of the lessons for people watching us, listening to this is every state goes through its cycle. Every capital city market goes through a cycle where it has strong growth and then a number of years of flat growth or even falling growth. So even though we're talking positively, we don't want people to think that you can just buy any property and it's going to keep going up in value, even in these strong capital city markets. As we travel around Australia, Hobart was the darling of property markets a while ago. It's had a flat period, but it's picking up again.
It does appear that it has. And when you look at the quarterly growth, it's that prices are at the highest level in 2.5 years. And it's the fastest quarterly growth in just over 3 years. So it added about $21,000 to the median house price. And what we've got is a far outperformance of house prices relative to unit prices in Hobart. And I think, you and I both know that units are a much smaller sector of Hobart's housing dynamic, and the property preference is houses in Hobart.
Well, I like the way Domain brings out house and unit prices. Other people talk about dwelling prices and then say one city's got different dwelling prices to other. I don't think you can compare like with like. In Melbourne, where you've got a third of the accommodation being apartments, units, townhouses, and places like Hobart where it's much, much smaller. So that's again where we'll link to the report for Hobart. And Darwin, the last as we go around the capitals. Darwin, houses didn't do much, but units are growing strongly in Darwin.
We did see quite a jump in unit prices. They're up by almost $21,000 over the 3 months to June. What we had seen is units in Darwin can be a little bit volatile in terms of their price point. And we had seen a bit of a quarterly dip over the March quarter. So I think it's a bit of a reversal of that. But anyway, growth is gaining momentum for units in Darwin. But house prices, they pretty much flatlined. It was a 0.2% increase over the quarter, which is quite a slowdown compared to what we had seen across Darwin.
In your report, you cautioned that the road ahead may be a bit uneven. Well, it always is. But what are the main risks that you see that could slow or reverse this very strong momentum we're seeing around Australia?
I think one of those big ones is if we start to see a pickup of inflation again, and if that changes the direction that the RBA go on. I think that's unlikely. I do think that we're probably going to see the RBA reduce the cash rate again in August. But I do think that what we have is that growth profile is changing across our different capital cities, and this is where it is really important to know your market. And even when you look within a capital city, there is multiple property cycles going on, and we've got some areas showing much stronger rates of growth relative to other areas. And as you rightly said, there's a divergence of performance even between house and unit prices. So there are nuances across our different capital cities, but what our expectations are, when we look at our price forecasts, which were released, not that long ago, but, about a month ago.
We had a chat about that. And for people
actually
who
some of the
haven't...
trends.
I'm sorry to overtalk you. We actually just discussed that about a month ago. So for people who are watching this or listening to us and you haven't seen my interview with Dr. Powell about Domain's house price forecasts, and there was a lot of evidence and facts behind those, please go back to wherever you're listening or watching this show and have a look at that, because Domain came out with some sound evidence-based forecasts that I believe were realistic. Sorry to overtalk you, but it was such a good report. I didn't want people to miss out.
It is a great report, and it leverages some of our behavioural data, which I think gives us a unique edge in our forecast. And interestingly, some of the trends that we picked up, that we forecast in that report, we're now starting to see a glimmer of that occurring. So, we're firm that we're going to see our bigger capital cities lead price growth. I think that we're not expecting some boom time scenarios, though. I do think that there is an affordability issue. There is a wide gap between where wages are and where home prices are, the capacity, that capacity to pay for a home. I think in essence that will help to limit the pace of price growth. But I think the momentum shift is clearly, evidently happening now across our capital cities.
Well, over the last little while, as interest rates rose and there was cost of living pressures, the lower end of the markets performed well, partly because of the affordability and partly because that's, I guess, where people move to. But I can see as affordability has crept up in, or challenges with affordability have crept up in those areas, it could well be the more affluent areas where people have not as affected by the cost of living, where people have multiple streams of income and where a lot of home buyers have significant equity in their homes and they can make those decisions.
It absolutely is. And you tend to find that often these premium locations actually lead price cycles. You tend to see prices move quicker in these areas and then the other areas then follow. And as you rightly said, you almost get to a price point, you're less affected by the cash rate, and it actually becomes more about the opportunity. And I think if you're in those circumstances, it's really hard to time the market. And I think making a property decision, a property purchase based upon your own personal circumstances and when it's right for you is the most important thing.
Very good point. Don't make 30-year decisions on your home or investments based on the last 30 minutes of news. Now, we did discuss this in the last chat we had about your forecasts, but maybe we could just quickly summarise, how do you see the outlook for the remainder of this year and beyond for the 2025-26 financial year?
So we are expecting prices to rise. We've got forecast growth both across houses and units. All of our cities, we're forecasting a below 10% increase over this current financial year. And what our expectations are is those affordability-driven markets are going to start to lose momentum. So we're going to see slower rates of growth, and growth is going to be led by what we describe as our interest rate sensitive markets. And they're markets like Sydney, Melbourne, and Canberra. They're higher priced, and what you tend to find is when rates are reduced or hiked, those reductions or increases are actually transmitted and amplified through their housing markets much quicker. And so what we are expecting is markets like Sydney are going to lead price increases this financial year.
Well, we'll be back again over the next little while to see how all those forecasts pan out. But I would agree with you. As always, it's a great chat. I guess for those watching and listening, I wanted to remind you that there's all these moving parts in our property markets, but rate cuts are going to breathe even more life back into our markets. As I said, there's affordability challenges. So not all markets are going to perform the same. But we'll catch up again in the next little while. Next time Domain has a report to hear what you've got to offer us. Thanks, Nicola.
Looking forward to it, Michael. Thank you.
As a way of having a bit more fun in these podcasts, you've probably known that each show I introduce a property trivia question, giving you, my listeners and viewers, an opportunity to win a hard copy of one of my best-selling books, Michael Yardney's Guide to Investing Successfully. I'm going to ask a question in a moment, and just go to propertytrivia.com.au. I'll leave you a link in the show notes. Enter your answer, and each week 3 correct answers will win a hard copy of my books. By the way, thanks for all of you leaving nice comments as well. But don't worry if you're listening to a slightly older episode of this show. Your entry will still count, and everyone who leaves answer, correct or not, gets a copy of an updated report that will give you lots of good property information. So here's this week's trivia question: true or false? More than 90% of Australian property investors don't get past their first or second investment property. In other words, 92% of investors don't ever own more than 2 investment properties. True or false? Go to propertytrivia.com.au, leave us your answer, and you've got a chance of winning a book, and you'll definitely get a report. In a moment, I'm going to share my popular mindset message with you. But before I do, let me share something I've learned after over 5 decades in our property markets. Most people only realise the market's turned after it's already too late to capitalise. And that's why I'm discussing this with you now, because even though, as we've discussed just a moment ago with Dr. Nicola Powell, the market's turning, many people still are waiting for interest rates to fall further, for everything to be right, for the world to have sorted itself out. But I genuinely believe we're now seeing one of those rare windows of opportunity before we move to the next stage of the property cycle. Look, what I'm seeing is interest rates are going to fall further, triggering another surge in buyer demand. Property growth is going to be driven by strong population growth when construction simply can't keep up. Government grants and incentives are about to be released for first home buyers, creating a surge in demand. And across the country, we're seeing a rising auction clearance rates. Look, we discussed that briefly in the discussion I had with Nicola Powell a moment ago, and that's a strong leading indicator to future house price growth. Fact is, the smart money's already moved into the market. So what about you? Are you clear on how you're going to take advantage of these market conditions, or are you still waiting for certainty? That's where our complimentary wealth discovery session comes in. I'm offering you to have a one-on-one chat with one of the wealth strategists at Metropole to help you clarify your financial goals, understand how these macro trends are affecting you, and we can show you how we can build you a personalized data-driven property strategy, allowing you to get ahead of the curve before everyone else piles in. There's no cost, no obligation, just practical advice. So go to metropole.com.au. I'll leave a link in the show notes and book your free wealth discovery session.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
My mindset message for you today is everything matters. This is a thought that may make you a little bit uncomfortable. You see, everything matters, every single little thing. You don't pick and choose when you show up at your best, not if you want to be a top performer, because the world rarely remembers your highlights, but it will notice your lowlights. It won't always reward you for your best days, but I guess unfortunately it's going to judge you for your worst ones. Look, think about it. A client doesn't care if you were brilliant last week, if today you seem distracted or disengaged when you speak with them. The market doesn't care that you made a smart investment 5 years ago if you're sloppy with your decisions today. And your family or your team, they notice the little things, your tone, your consistency, your presence, not just the big gestures. That's why the most successful people I know, whether in business, investing, or in life, bring energy, discipline, and enthusiasm to the small things, not just the big ones. They show up the same whether it's a multi-million-dollar deal or a simple team meeting, whether it's a major life event or a quiet Tuesday morning, because they know the truth. Excellence isn't an act, it's a habit. It's built on the mundane moments when nobody's watching. So here's my challenge for you today. Where are you coasting right now? What small things are you treating as insignificant? Because how you do anything is how you do everything. Remember, my mindset message today, everything matters. And when you show up fully, even for the little things, you're preparing yourself for the big ones. Thank you for spending the last little while with me. I hope you got some benefit from this show. But before you move on to the next podcast you're going to listen to, let me remind you I have another show that I produce once a week with leading demographer Simon Kirstenmacher. We call that Demographics Decoded, where Simon and I unveil the trends that are going to shape your future. In my mind, this is a must-listen-to podcast for anyone interested in property investment, but also for business people and entrepreneurs. So if you don't currently subscribe to Demographics Decoded, just please stop for a second and subscribe on your podcast app where you're listening to this, or on YouTube. And of course, if you don't subscribe to this show, the Michael Yardney Podcast, why not click the link that says follow or subscribe wherever you're listening right now. So twice a week, you're going to get benefit from my guests and me. And I'd like to ask you a little favour, please. If you did enjoy today's show and you know somebody who would also benefit, please tell them about the Michael Yardney Podcast and Demographics Decoded. There's a share button on every podcast app. On Apple Podcasts, there are 3 little buttons at the top of the player. Well, just tell them about it. Just have a chat with them. Now, I hope you're going to be doing them a favour, and you're definitely going to be doing me a favour in my quest to help as many people as possible to become financially literate. And by the way, I've got a special bonus for you. As my way of saying thank you for subscribing, just go to podcastbonus.com.au. There'll be a link in the show notes, podcastbonus.com.au, where I've got a bunch of ebooks and reports. It's just my way of saying thank you for taking the time to listen. And remember, the information that we give you in this podcast is general information, not specific information about your personal circumstances, because we don't know about them. But if you do want specific information, you can always have a chat with my team at Metropole. Go to metropole.com.au. If you really want to learn more, you can always listen to the previous podcast, the many episodes we've already published. Just go back to the old episodes, which each have lessons about property investment, success, and money. Once again, thanks for listening to today's show.
Thanks for listening to this episode of the Michael Yardney Podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney Podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael, but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?